Hi guys, welcome to my latest market update. Hey, thanks for tuning in. Now, just in reference to my last video blog I did where I said that I thought prices might go a little crazy this winter. If listings drop away and the demand continues as it has every other winter, then we would see that. We have seen that to a reasonable extent thus far. Prices have continued to push up and listing stock right now is quite low. I'll come to that later. But when the Reserve Bank sat on its hands for a few months and didn't tell us what they were going to do or if they were going to do anything, it allowed that market to do that. However, they have, just in the last week, as you'll know, come to the party and said, look, we're going to increase investor LVRs to 40% right away across the country. And instead of doing 1st of October, like in 2013 and 2015, they've done 1st of September, which is a little bit earlier. However, the major banks jumped in and have said, well, we're going to do it from now, in the spirit of the Reserve Bank's policy. So it'll be interesting to see what happens over the coming months. So straight away, I've had people on the phone calling me saying, Scott, what's going to happen in the market? People asking for a video market update and that sort of thing. So I thought I'd run through a few things today on if there's a change in the market, how it will come about, and what are the factors that influence that. So we have the two sides, the supply and the demand. So as we look at the supply, things you need to keep your eye on are the number of building consents being pushed through. We've got a huge number coming through now, record numbers of apartment consents going through. So what does that mean? What sort of effect can that have? So as consents increase, it means that we've got the labour shortages. Traditionally, as people are sucked into the construction industry, we start to see unemployment figures come down. And then we get the economic boost. There's a flow-on effect from that extra employment in the industry. The alternative to that is what's currently happening at the moment with the high migration. We're not seeing that unemployment rate come down as much as might have been thought. So the other side of that is we get bill cost inflation. So that's just something to note and think about as we talk more about this. So the other thing, one of the other factors influencing suppliers, in 3 or 4 weeks' time, we've got the unitary plan coming into effect. Now, over the last couple of years, we've actually stopped talking about it around our office. It's just something that's coming and it's coming and it's coming. We didn't really know if it would ever finally come, and now it is. And we really don't know what the effect of it will be. The intent is for more intensification, more development, but how long until that actually comes into effect? We'll have to wait and see. The real effect of it, I mean. So people have to get consents, they have to design their plans, all that sort of stuff. They've got to find the builders and actually got to go ahead and do the development. So yes, that's something that will affect supply, but when, how much, yet to be seen. Government intervention is the next one, and we've seen that with the last couple of years with special housing accords coming into play. It's also become a bit of a political football in the last few months with Labour and what they're going to do with their 100,000 houses that they want to build. And if that gets some traction, National will adopt more of their policies, and National are already saying that they had the same policy anyway. I don't know, there's all tit for tat, but basically if the government intervenes and builds extra houses, that will affect supply as well. And next year's an election year, so it could be a bit of a lolly scramble in that regard. Becomes very political. So factors influencing demand. This is the flip side of it. The big one, the talking point, migration. How many people are coming in? But I've got another aspect of migration I'd like to talk about, and that's internal migration. So, let's just talk about it. At this point, it's forecasted to drop. They reckon by 2019 we'll be down to 12,000 instead of down from the 68 or 69,000 annual net migration we have currently. Now, we know most of those people come to Auckland, but the only reason why they're forecasting it to drop is because they think it will reach long-term averages again at some point. They don't actually predict that there's going to be a massive economic shift or fundamental change that will create a drop in migration. I'm thinking that it will be when the Australian economy improves relative to New Zealand. We'll see those migrants going to Australia instead of here, but we might also see that negative migration flow back to Australia. Okay, so I want to know about this though. Internal migration figures. I haven't seen any, but I know from my people that I represent in the market, my clients, me personally, I looked through my last 22 sales over the last 3 months. I've had 2 people for Tauranga, 2 go to Wellington, 1 in Invercargill, 1 go to Nelson, that was last week, 1's going to New Plymouth, they're down there already, 1 said they're moving to Australia or the US they're still deciding, and 1's moving to the outskirts of Auckland, which Australia and the outskirts of Auckland don't really count, but all of those other ones we're talking about all this extra housing needed in Auckland. Well, if the migrants coming to Auckland are pushing people out of Auckland, then what discussion is being had around the consents in the other centres like Tauranga, Hamilton, New Plymouth, and these centres where people from Auckland are moving to? So maybe the demand is not that big in Auckland because every person that comes in pushes one out. I don't know. I haven't seen any figures on it. Interested to know if anyone else has. Okay, so the next thing, LVRs, mentioned it before, it's been really big in the media. So you've got the Reserve Bank have imposed the restrictions on lending, but then the banks themselves actually went ahead and adopted the policy in advance. They've also adopted other policies around allowing foreign income to secure loans for houses in New Zealand, trying to put the brakes on the overseas buyers as well. There's a lot of interesting stuff happening around there, but as that increases, that's a factor that will affect demand. Are there ways around this? I was talking to a broker yesterday who said you can still use Resimac, which is an Australian firm that allows for a 2-year interest rate in New Zealand of 4.95%. You can use them if you're buying an investment property to top your equity up to 80%. Then in a couple of years, once that rolls off, you can actually refinance and then get the bank to take the debt. So there's other ways around it. I've also heard about the the Chinese bank. I've heard that you can get finance in China for a property in New Zealand, which is then released at their local branch in New Zealand. I don't know too much about that. It was just something I heard. But are there ways around it? I'd love to know if there's people out there, maybe of people who are actually getting money for houses outside of these sort of restrictions. So then we've got interest rates, obviously affects supply. Now, interest rates tipped to come down with the LVRs going up. The economy and inflation requires lower interest rates. They didn't want to put them down because of the effect on the housing market. But if that implementation of higher LVRs has given that freedom for the Reserve Bank to lower interest rates, so that's something that will affect demand. So I always look here. I look up on realestate.co.nz, and I've included it today as well. That I just go on and I look up North Shore City, Glenfield, and I see how many listings we've got. It's at 39. I was on Trader yesterday. It was at 36. This is the number of available stock in Glenfield. When the market was quite tough at the end of last year, I saw that up around 113. A lot of this year, it's hovered around 50 to 55. To see it down at 39, clear example of the fact that in June it rained a lot. Nobody wanted to come on the market, and that properties are still selling well. We're starting to we're still seeing sort of two types of buyers in the market that we've been talking to. The ones that have a pre-approval that want to buy fast before that expires, and the other ones that are sort of sitting back going, well, maybe there's a tipping point coming in the market and I might just sit back and watch. Okay, so my prediction, I know you guys want to know this. Well, I've always said the market can go both ways at any time for any reason. And the reason I say that is because if we knew that in a year's time or in 6 months' time prices would be higher, people would be buying now, which would be forcing prices higher now in advance of that. So everything is all speculative and it happens in advance. So if we thought the prices were going to be lower next year, people would stop buying now, and in fact the prices would fall now, meaning that in a year's time they could well be higher, which is the exact opposite of what we thought. So it's actually that whole perception of what's going to happen in the market that affects the market at the current point. So there's no way anyone can say right now that it's going to go either one way or the other. I mean, they're predicting migration to fall. What if it goes up to 100,000 or 120,000 annually? I mean, anything could happen. So I always just say to you, if you're buying for the right reasons, your decision will take care of itself. And the reason there is that if you want an investment property, so long as it stacks up with the rent returns, the interest that you're paying, and you don't need the capital gains. So it doesn't matter if it goes up or down. Okay, you might end up in a negative equity situation. That's something you do need to look out for if you're negative gearing and all that sort of stuff. But if you're buying for the right reasons, if you've reached a point in your relationship where you're getting married and you want to have kids, you want to have you want to move to a house that's nearer to a school or a kindergarten, or you're moving to a retirement village or whatever, you're going to buy or sell for the reasons that are right for you at that time. I wouldn't be trying to predict the future in terms of property. So my concern is that all the interventions with the government, the Reserve Bank, etc., are going to take place and take effect right at the time that the market naturally balances itself, with migration falling, with increase in supply, all at the same time. So that's my concern. My hope is that when that happens, the Reserve Bank and government actually identify that the bubble is bursting or that the market's changing, and they start reversing or easing some of these policies. Thanks for listening to all of that. On a completely different topic, I conducted a buyer survey. I've got around 750 people on my buyer database at the moment. Sent an email out to, I think, about 487 email addresses I've got, and I've got some responses to an 8-question survey. I'm going to be posting each of the results up on my webpage as we go. Each week I'm talking about another aspect of the survey. Some quite interesting stuff there, so you can check on that at different times. And if you want to be on that buyer database, let me know, because I do have listings that don't actually go to the market. Every now and then I come across a vendor who says, hey look Scott, we actually don't want a big auction program, we don't really want many people through it all. Just bring me one buyer who's willing to pay good money and I'll sell it to them. So I've got one of those at the moment that's going to be going out to my buyer database. If you want to get on that, let us know. Thanks very much for watching. I hope it was enjoyable. I'm sorry it was a bit longer this time, but all the best. Take care.